I'm Ben Protest with DealBook at the New York Times. Today we're joined by Jason Goldberg, a senior analyst at Barclays Capital. Jason, how did the banks perform in the fourth quarter of 2010?
Yeah, I mean, we expect results from the banks in the coming weeks, and we think the majority of banks will exceed consensus expectations with results improving, versus the third quarter, evidencing really the first positive quarter for loan growth out of the last 9, stable to down net interest margins and mixed fee income trends, and most importantly, continued improvement in asset quality.
What will trading revenue look like?
Yeah, I think trading's going to be mixed. I think you'll have decent equity results. I think fixed income results will be under pressure, amid a backup in interest rates during the quarter.
Any sense of who the best performers might be?
With respect to trading, obviously it's always somewhat tough to tell. I think investment banking results in general, I think the bias is upward, just given strong quarters in investment banking fees driven by M&A and equity underwriting. Fixed income underwriting came up with a little bit of pressure, and fixed income trading probably under pressure as well.
Fewer loan losses this quarter, you think?
If you look, in 24 out of the last 25 years, loan losses actually increased in the fourth quarter, in part, I think, as banks try to clean up their balance sheets for the year ahead. Despite that, we do think loan losses actually decline in the fourth quarter of 2010, aided by the economic recovery.
What about the dividend issue? We see banks raising their dividends this spring?
Yes, we do think dividend increases are in the cards for some. We don't expect them during the first quarter, but do think it's a possibility in the second, kind of post the second round of stress testing the Fed is doing. But I think the banks that have remained profitable throughout the cycle, will be the ones among the first to increase their dividends, come April.
And do you think J.P. Morgan's going to lead that chain?
We do think J.P. Morgan will be in that grouping. I put U.S. Bancorp, Wells Fargo, PNC, Bank of New York Mellon, State Street in that camp as well. Great.
Any surprises that you're expecting to come out of these next 2 weeks of reports?
In terms of surprises, I think loan growth could surprise on the upside. Typically loan growth tends to bottom and then improve about a year after the economy. Economy bottomed in the third quarter of last year. So I do think you'll begin to see an improvement, particularly in things like C&I, leasing, and auto. Mitigated somewhat by declines in commercial real estate and home equity. But I think, we've seen down loan balances in each of the last 8 quarters and could see a slight uptick this quarter.
Great. Thanks for joining us, Jason. Really appreciate it.
Thank you.